Hi, everyone, and welcome to the next episode of the HeelanHub podcast, the show for small business owners. I'm Dan Heelan, and on today's show, it's just me talking to you today about some little known tax reliefs. So being that there's 22,000 pages odd of tax law, it's not surprising that you and indeed accountants might not know every single one of them. Our job as accountants in general practice as we are is to make sure that we are aware of these things and that we constantly look for new buried special nuggets. And today I did want to talk to you about a couple that recently popped to mind where I was thinking, do you know, we were looking at a particular client's books where they hadn't had many tax deductions. Sometimes there just isn't that many expenses, and we were trying to think of, okay, what else could be done? What else could we tell the client about? And actually I thought it makes a really good podcast just to talk to you about some of the little known ones that don't often pop up, but in the right circumstances are quite tax efficient. So let's get into it. So then, as I said recently on recent shows, we have been recording this and putting them up also on YouTube. So if you did want to watch it, or you've got YouTube Premium or something, and you want to kind of watch it in the background, you can come and watch me talking to a microphone and not look you directly in the eye, but we'll figure that out at a later date. But it is there if you want to come and see me talk as we do this and do it sort of semi-live. Now, and you can do that, of course, just stick HeelanHub in YouTube. We've got our main YouTube channel, Heelan Associates, and that's there of all our guides and all the rest of it we do. But this one's just a small side thing that I thought would be cool just to stick them up there and let you guys interact there, because one of the biggest challenges with podcasts is not being able to kind of interact with you. And you've got the comment boxes below. I know that people send us emails all the time, which is really nice, but sometimes it's nice for everybody if you've got a question to put it down in the comments below. So if you have, visit YouTube and stick it in there, subscribe, and it's great. We get a great kind of satisfaction, I guess, from being able to interact with people on the main YouTube channel. So it's cool to be able to do it through the podcast as well, because I know so many of you get this via Spotify. So please do pop over there if you've got any comments and stick them in the video. Sometimes there's a bit of a delay between when you're listening to this show, if you're listening to it as it came out, and when it goes on YouTube, but it will be there. So bear with us. So then let's talk about these particular type of tax reliefs you might not know about. Now, I want to say that they're employer reliefs, but generally you're going to see the most used as a limited company, because you as the director also can use these rules as an employee. So I think that's where we'd see the most use of it. But generally, I've got a team of 40 odd people, and we would definitely use some of these. We do use some of these for some of the teams. So it is a general team thing. So if you've got a team, you might be thinking, this is quite a cool thing to be able to offer my team. But if it's just you as a director and you want to benefit from some of these things, that's there as well. So then, in terms of reliefs, the first one is welfare counselling. It's quite an interesting one. So this type of counselling can be a tax-free benefit. Now, a lot of these things I'm going to talk to you about, the definitions are very specific and the conditions are quite tight. So you do have to fit in a bucket. And even then, I think there's a bit of interpretation about whether you fit in that bucket or not. So as always, kind of see this as education and not a Dan told me it was okay. You do need to look at it on the facts, seek professional advice if you don't know, and go from there, because sometimes it is a judgment call on this. But on welfare counselling, this type of counselling can be that tax-free benefit, providing amongst these other conditions that it's available to all employees. Now, obviously, if you're the only director or it's you and a significant other, then as long as it's available to the both of you, it's fine. Not everybody has to take it up, just has to be available. They do this with a lot of taxable benefits because they don't want it being like a director only perk. They want it to be something that it's like a cultural thing that's offered out widest to the team. So make sure that you do that and it's offered out. But it can't include medical treatment exactly. And it can't also include, and this might sound odd and I'll explain why, advice on finance, legal, leisure or tax, unless it's something like debt counselling. And the reason they mention this is that sometimes you have employee assistance lines, and there's a separate thing for that, which could include some of these, and that's generally seen as okay. But oddly, directly you paying for sort of financial advice or leisure advice. I don't know why leisure particularly, but it was just on there. I don't know whether it was travel agency. I don't know. Maybe there's some weird definition. There would have been some reason why that's in there, but you can't do it. So, but I suppose the best way to think about it is what you can do. Now, the HMRC guidance says that the subjects on counselling would be limited to, or included, say limited to, they're meant to be inclusive of stress, problems at work, debt problems, alcohol, career concerns, bereavement, equal opportunities, ill health, sexual abuse, harassment, bullying, conduct, discipline, and personal relationship difficulties. So there's quite a lot of life's sort of challenges there that come under that welfare counselling headline. Now, I think like all these things, they're designed to be used for a bit of like help for you to get over a hump. So I think if you're going to look at, say, long-term counselling where you're going to be paying every single week for something for the foreseeable future, you're going to have to talk to a professional about where they feel that risk fits with this. But generally, that's what it's for. But most commonly you would see it with somebody who's struggling for a little bit and they need a bit of help to keep them in work. I think that's what many of these reliefs are for. So, but know that you as a director, if you do need a bit of help and it's available to all of the team, then generally it's going to be available for be as a tax deduction. So the way this tends to work is the company pays for it. And this is quite a big important thing. The company speaks to the counselling service direct, pays direct, and therefore the company gets a tax deduction on it and the individual won't get a taxable benefit. And I know it sounds weird because you think benefit sounds like a good word, but where tax is concerned, taxable benefits come with a tax bill for you and for the company. So just bear that in mind. So that we're looking for something not to be a taxable benefit. In this case, we want it to be a tax-free benefit, which this would. So that's the first one, welfare counselling. Now, on that lines, let's talk about health as well, health screening. So health screening itself is another relief that's kind of tucked away in the bottom of the manuals. But what they say is you're allowed a maximum one health screening assessment, and it's very defined thing here, one health screening assessment and one medical checkup in a year. Now, there's no limit to this in the similar way that there's no defined limit to welfare counselling. There is something where an occupational health person says, in order for this person to return to work, we need to do X. And actually there is a limit on that. I think it's 500 quid, but this is slightly different. This is the health screening and the medical checkup. And again, there's definitions. I won't bore you with it in this video, but I'll put some links in maybe, and you can go check out the definitions of what they are, but they're pretty general to what they sound like. And this screening, again, has to be offered to all employees. So it's quite a nice, I think it's quite a nice perk anyway, and not everybody takes it up. I mean, as an employer that provides private medical, it's interesting to see how people engage with that and how people don't. So that's actually available. So there you go, health screening. So if you are thinking of that, you've got to that age when you're thinking, you know what, I mean, it doesn't have to be a particular age, but it's most commonly when you see it, somebody gets to a certain age and thinks, I need to go sort my life out and check out and getting on. Potentially these are things that the company could pay for. So bear that in mind. Now, the other thing is, and this is definitely something that's more in our wheelhouse, is talking about pensions advice. Now, in our job, we quite often frequently talk about pensions. So we will talk about, okay, what's the tax benefits of doing a pension? And for our clients, that's all kind of inclusive of our service. We talk about what the tax benefits are of doing that and everything else. What isn't included, because it's regulated financial advice, and us mere accountants, despite our qualifications, can't talk about things that are financial advice. That's in the realms of the financial advisors. So you normally need to go and pay for that opinion. And what the company allows you to do is up to £500, you can actually pay for pension advice, and the company can pay for that. So it's really, really good. So when you do go to look at that and you do need some help, know that advice is potentially available with that £500, which is cool. And that particular one it's the first £500 a year. Sometimes these tax reliefs aren't very good in that they're like all or nothing. So you might have heard me talk about annual functions. So if you go on a Christmas do and take your team, there's a very defined limit that you're allowed £150 per head. But if you go to £151 a head, boom, you're done. All of it's taxable. But this particular £500 advice is the first 500. So it doesn't matter if you spend more than that, which is quite common. Your first 500, the company's going to pay for without there being taxable benefits. So interesting. I mean, I think an ideal practical solution would be to try and keep it under 500 because it makes the paperwork chain far easier and there's less questions around it. But that's there. So I think that would be good if you're looking to get regulated advice about what, or is it a good idea to get into a pension, or where should I put my money, that kind of stuff. Whereas accountants would be able to tell you, yeah, look, it's a good idea for tax, or no, it's not, and here's the consequences, or whatever the case may be. They'll be able to tell you that. But if you need to pay for financial advice, that's there. Technically, though, some of it from a tax point of view is also covered. So if you didn't have an accountant and you did need to talk about tax advice or a tax advisor, and that, in theory, the relief's the same. It mentions those kind of common scenarios, but it's pensions advice. So that one's hidden away. And then the other one I thought is really quirky. We often talk about the fact that this concept that in general, commuting is not tax deductible. So it's not for your average person going to work, is it? You don't get tax relief because you have to go to the office every day. Or for some people, maybe not at all. But, when you do have to commute to the office, generally they don't give you tax relief. The way it does work is you generally get tax relief when you go to a temporary workplace. When we're talking about being an employee, or in this case, because it translates because of the way the tax law works, a limited company. If you're a limited company owner, you're looking at, if I go to a temporary workplace, so I go to a client's for that one random day, then the travel there and back is normally allowable. For example, we've done other shows on that, so you can go listen to me talk about that in more depth, but that's generally allowable. So this idea that generally these things aren't allowable is right until you chuck in these odd reliefs. So there's something known about late night taxis. I don't think there's a really cool name for it. It's just listed as late night taxis in the revenue manuals. But so where a limited company pays for one of the team, and this could be you, as we said, as a director, and you've gone from a work to home journey, that's normally, if you did that and you put it through properly, that would be a taxable benefit. The company can absolutely pay for it, but you would pay personal tax. So you don't tend to do it. You tend to do it in a different way, or you just take the money as dividends or something like that to keep the tax bill down. But if you satisfy the late night conditions, you could pay this without it being a taxable benefit. So it becomes like a tax-free benefit. And these conditions are, and again, these aren't, there's some more around it, but this is relatively detailed. The employee, so could, again, think employee, think also you, is needed to work later than usual and at least till 9 p.m. Late night working occurs irregularly. So if you're like me and you live in the office, maybe you could argue it's not irregular, but in theory, for most people, it's not regular to work past 9 o'clock at night. Although I know many self-employed owners that do on a regular basis. By the time the employee stops work, either public transport has stopped, or it would not be reasonable to expect them to use it. So it might be dangerous and whatever else. And it just seems, it wouldn't be great to say, thanks for working till 11 o'clock at night. See you on the bus. It's not going to be happening. So, but that word reasonable, of course, is open to interpretation. Your transport is provided by taxi or equivalent road transport, and you do not claim more than 60 times a year. And it's quite a lot, isn't it? 60 times a year. So, but that 60 times a year is in combination with the rest. So it's not just a case if you can do the 60 times a year, it's 60 times in these instances. So I think that's worth bearing in mind. You've got to consider all of it in one go. And in almost all of these cases, you as the employer want to pay for that. I know sometimes it might be a bit weird because the employee would pick it up because they're the one paying it on their Uber or whatever. That's possible. But generally, if you wanted to make it easy, you would pay for it. So, and I think that can be a really useful relief if you're working late and it's something that's underlooked. Now, and you might find actually that most of these things seem quite small. I know the council one might be relatively big, depending on what you're doing, but they seem quite small. But people often will ask, like, Dan, what's the best way to save tax? And I always come back to the same idea that tip one is always keep good records. Keeping good records will mean you capture everything that should be deductible, right? We're not looking at offshore schemes and the new TikTok trend of we're going to open you up a trust in Cyprus and all this rubbish. We're talking about normal, everyday tax reliefs where you just need to capture things and know what the rules are. And this is very much in that vein. We're not talking about tax avoidance here. We're not talking about anything. It's in the manuals. You can do it. You just don't know that it exists. And therefore, and I bet you, if you ask many accountants about some of these things, they won't know about them because they are that buried sometimes. Unless you constantly look for these things, you just don't know them. You don't know they exist. You can go years without thinking this because in general concepts, this commute type thing is not allowable. It's just very specific rule. So, and you might think, okay, cool. So keeping good records is going to save me tax. But the other one is knowledge. And that's why you're here listening to this. You want to know what's possible because then you can put it through. But you would have paid for that personally, which means if you're a limited company owner, you'd have paid corporation tax already on the profit, to have withdrawn it, to have paid income tax most likely on the dividends, to then pay for that taxi, which actually could have been completely allowable under these rules. So it is knowing these kind of things, and in combination, knowing all of these reliefs really does make a difference to your bottom line. And it's why would you pay more tax? I liken it to the fact that your NHS nurses can quite often claim a flat deduction for their uniform. They're not tax avoiders; they're just using the rules that are available for them because they do need to wash that uniform, and that costs money. So I suppose I could choose not to wash it, but I don't know how that feels. But using these reliefs is very much in line with what they're there for. And then I think finally for me, a recap, there's something known as trivial benefits. And I think if you were looking at the various rules that seem a bit weird, trivial benefits is going to be that one. And that's this idea that the company can pay for gifts of up to, gifts is normally how you see it used, but it doesn't necessarily have to be, of under £50. And there are very specific rules. I won't recap it in this show, but we've done shows on trivial benefits. Or if you're thinking, I'll check this out later and I can't bother to search it, go to our website at HeelanAssociates.co.uk and just set trivial in the search bar and it will come up and tell you the rules. But it allows you, the idea is in the spirit of the kind of the rules, is it allows you to buy, say, a bottle of wine for one of your team for their birthday or a small birthday gift under 50 quid, and then the company can recover the cost of that against their corporation tax, and that's nice. And the employee doesn't get taxed on this lovely gift that you've given them, but it also applies to you as a director. But there is a cap as a director because guess what? People potentially could abuse it. So there's a cap for you as a director. But check out the information we've recorded on that previously and you can get there. But that's probably the weirdest one that sounds a bit almost too good to be true in some instances. But if you use it in the right spirit, it's just another one of these small reliefs that can help save some tax. You think about it, if it's £300 a year as a cap, you're not saving loads of money. But again, it's that concept of we're not paying corporation tax and income tax to buy the thing. We can use the rules to have the company buy it in the right circumstances. And that's the big one, in the right circumstances, in the right conditions, under the right definitions. So that's the more challenging bit. But I want you to be aware of it. That's the whole idea of this type of content is I just want you to know it's there. No one teaches us this stuff in school. And I think it's really interesting to just know that these things exist. We internally, we have a huddle every day where we get together at 9 o'clock and we share, what's going on in the building, maybe client success stories, that kind of stuff. But we also do tax facts and things like that. So actually, geeky as we are, we quite enjoy these kind of like weird, quirky facts. So, and you're now part of that by listening to some of these. So there you go. Hopefully you've gone away and you can share that with your friends and business contacts. So there we go. There are 5, quick recap for you then. As I turn this page, we've got welfare counselling, health screening, pensions advice, late night taxis, and a good old favourite that nobody seems to really be aware of, trivial benefits. So as I say, seem small on their own, but in reality, they actually, if you use them in combination, can be very useful and add up to quite a lot of money. And I think in a world where tax allowance has been frozen, if your business starts to do well and you start to withdraw salary and dividends up to about 50 or grand, it can be very easy to start creeping into 51, 52, 53. And then, you start to get towards having to pay child benefit back and all this. And if you'd actually, the company had paid some of this stuff and they weren't your earnings, you might have saved even more money. So very, very important. We've got a really weird tax system in the UK where you get penalised at certain levels really heavily because you lose other reliefs like child benefit and tax-free childcare at certain levels, all that kind of stuff. So you want to be using these rules to kind of help you with that as well. So there we go. Hopefully you've enjoyed today's show. If you have enjoyed the show, make sure to subscribe both via your favourite app for the podcast and also via the YouTube channel there, so you don't miss an episode. If you do love the show, you can also review us on those apps, which is great for our visibility. So if you do have a few minutes to share a couple of comments and thoughts and a few stars reviews, that'd be great. Hopefully more than 2. And for business insight and tax tips, be sure to connect with me and my great team on all the social media channels, including, of course, LinkedIn, TikTok, YouTube, Facebook, Twitter, pretty much anywhere there's a social media channel. And you can sign up to our 2 weekly HeelanHub Herald, which is an email direct to your inbox every 2 weeks. And you can do that on our website. Just go to HeelanAssociates.co.uk and you'll get this annoying box that pops up and says, would you like this? And you just stick your email in there. We do not share that with anybody. It's just for us. If you are interested in getting into business or you're in business and you're not in the cloud, absolutely, cloud software is the way to go. We talk about keeping good records being the number one tax saving tip, and I would recommend that you do that via Xero. Surprise, surprise, we have a link that you can use to get some cheap Xero subscriptions. Currently, at the time of recording this, I think it's something crazy like 97% off for 6 months, and you can do that by using the link HeelanAssociates.co.uk/Xero. Go there, get yourself a cheap Xero license and get into the modern world. You won't regret it. And if you do want to get in touch about the podcast, obviously you've got the comments on YouTube, but you can email us direct at info@HeelanAssociates.co.uk. That's it. Have a profitable and tax efficient week. And I'll see you in the next one.